What's up guys, and welcome back to my channel once again. So in today's video I'm going to be talking about how to make entries on the 1 minute time frame. Let me say the lower time frames. Okay, so if you've been struggling with entries, like what to do when price gets into a point of interest or another block, then this video is for you. You might want to stick around to the end of this video. Okay, and if you're not subscribed to the channel, kindly hit that subscribe button, turn on post notifications so that you don't miss out on other future important videos, right? So with that being said, let us jump straight onto the charts and see what we've got for today. Before we delve into what we have for today, I have two quick announcements to make. Right, the first one is to say a very big thank you to you guys for the support that you have given me in growing this channel. Right, I couldn't have done this without you guys, and so I would really like to say a very big thank you for helping this channel to achieve this 1000 subscriber milestone. I'm really grateful for this. And as a means to say thank you, I'll be doing this video on the entries like I promised in my Telegram channel, right? And with the second announcement, if you check in the description of my YouTube channel, you're going to see that I have stated in there that at 1000 subscribers I will be making weekly market breakdowns, right, prior to market opens, right? And so I will be fulfilling that promise as well. Starting from this Saturday 11th of June, I will be making breakdowns of Euro USD, right? The fact that you don't trade Euro USD doesn't mean that this video is not, or this breakdowns that I'm going to be making is not important to you, right? It is very important. And the reason why you should watch this breakdowns or forecast that I'm going to be doing before market opens is because, you know, Euro USD is just the inverse of DXY, right? And DXY tells the strength of the dollar. And so if you're able to get the direction that I'm going to give on my forecast, okay, you are going to get the direction of DXY. And that is going to help you to tell the strength and direction of dollar pairs, right? So quickly, let us jump into what we have for today, okay? So in this series, I'm going to take you to my trading journal and I'm going to show you some entry modules that I personally use, right, in taking trades. Okay, so let us quickly jump into my trading journal. So the software that I use is Notion. That is what I use to journalize my trades. Okay, so personally, I have about 5 entry modules, right? But today I'm going to be talking about just 4 of them, or yeah, I'm going to be talking about 4 of them to you guys so that you can also implement it after backtesting into your trading plan or trading system. Okay, so quickly let us look at the first model. So what I'm going to be doing in this video is that, you know, I'm going to show you pictorial drawings, right? And then after that I'll show you real life examples on the chart, okay, which I have already taking screenshots of. Okay, so the first model that I use is the normal break of structure model, right? And I term it as a sign of bullishness in case of an uptrend, or a sign of bearishness in case of a downtrend, right? So what I personally do is that, let's say for instance, if the market, is bearish, right, making lower highs and lower lows, right, and we have our supply zone, right, price comes into the supply zone, or what I'm going to be waiting for is for price to do what, make that minor break of structure, which I term as a sign of bearishness. Then I can look for entries right here to take the trade to the downside, right? So that is the first model that I use. So on the first example, right, this was a counter trend trade on the 15 minute, right? So the 15-minute low was in confluence with the Asian low, right? And it got taken out. So I had a change of intent. So 15 minutes was bearish, right? So this trade right here that you see is a counter trend trade to the 15-minute time frame, right? So in here, you can see how price gives me this confirmation, right? After taking out the 15-minute low, I had price making what? Lower highs, lower lows, lower highs, lower lows, lower highs, and then I had that switch, right? Immediately I see that switch, I'm going for my entries, right? And that was how I entered this trade, okay? And the target was to take out the Asian high, right? So that was the first example on the live chat. Another example. So this is also another example on the live chat, right? Where I think this was also a counter trend trade, right? And I had the 5 minutes make a push to the upside, break structure like this, right? So I was bearish, and all what I was expecting was for price to come into supply zones. Then I can look for my confirmation to sell, and we can see how price came into these levels, right? Making what? Higher highs, higher lows, higher highs, higher lows on the 1 minute, higher highs, higher lows, until we had this beautiful change, right? This is a sign of bearishness for me. Immediately I see this, I'm going for the sales, right? You can see how simple these things are. In fact, entries are the simplest part of this whole game, right? So another entry model that I use is called the follow through BOS model, right? And mostly I use this in two ways. The first is to take counter trend trades, and the second is to take trades or to enter trades when I had initially missed a previous confirmed entry, or when I had intentionally delayed entries. So with this kind of entry, what happens is that, sometimes you can come onto the chart and you are not going to see the 1 minute doing something like this. You're not going to see the 1 minute give you this kind of confirmation. No. But what you're going to see is that the 1 minute probably had made, or let's say on the 5 minutes, you might have had something, let's say 5 minutes internal structure doing something like this, right? And you know that there is a higher possibility of probably this 5 minute structure breaking due to certain confluences which you might have, right? And the 1 minute will not give you any solid confirmation like I did in the beginning, like that kind of break of structure kind of entry model. The 1 minute might not give you that. Okay, so it means that if you have any entry to make, you have to wait for this 5 minutes level to break. And sometimes if you try to wait for this 5 minute entry levels to break, you might miss out on the whole move. You might have price making that like swift movement to the downside without even retracing, and you might end up missing on a trade. Whereas in this case, with this kind of entry model, what you're going to see is that price will do something like this: first push, second push, and third push. Immediately I see this, I am convinced that weakness has set into the market, and so I can look for sales, right? And so you see me start looking for sales right in here. Okay, so examples of this kind of entries, let me show you real quick. So if I come in here, like I said, I use it when I'm taking counter trend trades, or when I miss an entry, okay, or when I intentionally delay an entry. So in here, the 5 minutes had made a push to the upside, right, and came back down, and we had that breaker structure. Okay, so it means that I can have trades into certain levels of the 5 minutes before I can sell the market to the downside. Okay, but how do I capitalize on this upward move? Okay, so like I said, if you look in here, price was making what? Lower highs, lower lows, lower highs, lower lows, and this was the last low that created a high. We can see that after that lower high creating that lower low, there was no break or structure. Okay, but because I know what I was looking for, immediately I see this 1, 2, 3 move, I know that I could be buying from this point of the market to target any place which I take as my target, mostly with counter trend trades like this. Let's say on the 5 minutes, on the 15 minutes, I take like 5R and I'm out of the market, right? And this trade that you're looking at on your screen right now, it was about 6 or 5.6. Yeah, it was about 6R, right? Another example of this entry model on the live market. Yes, so in here I intentionally brought in the 15 minute to show you guys something. So here the 15 minutes had made a break of structure, right? I think this was from last week Friday, and I personally had some buys in here, okay, and my intention was to see price take out this 5 minute high, sorry, this 15 minute high, okay, because 15 minutes was bullish. So my buys were in, and immediately price got to this level, price started showing some weakness, okay, and this weakness provided an entry with this model that I'm talking about right here. And so let's go to the 1 minute time frame. So on the 1 minute time frame, so this was basically the high that was supposed to break, that failed to break, okay, the high that I was expecting to take out that 15-minute high. So we can see that, you know, before that, price had made this bullish push, right? We traced into this level, and I was expecting this level to do what, to continue take out this high and that 15-minute high. But we can see that immediately price got into this levels in here, probably because of this small break of structure over here. So immediately price got in there, price started showing some signs of weakness. You can see 1, 2, 3 move, right? Still showing some sign of weakness. So at this point in time, whatever trade I'm taking here, I know that price has the tendency to come in here, right? And this level of demand will still respect and push up. And so when I'm taking this kind of trades, I take it as a risk entry trade, okay, until I see this low taken out. Okay, so this is the same model, the follow through break of structure. It just tells you that weakness has set into the market, right? So this is it. If it is a buy scenario, you're going to have it on the upside. You're going to have, let's say, something like this, right? If it's a buy scenario, you're going to have something like this, right? Then you're going to enter the market right here, and you're going to take it to the upside. Okay, so that is it. So let's move on to the next model. The next model is the flip model, right? Flip model. So in this model, you're going to have price come into your supply zone, right? You're going to have price come into your supply zone, and after price has come into your supply zone, that is in the case of a downtrend, okay, let's say price has made that break of structure to the downside, right? And so you're looking for sales. Whatever I'm showing you here, you just have to rotate it or make it an inverse for buy scenarios, right? Great. So price comes into your supply zone, and you have this last point on maybe 1 minute time frame, which you're supposed to create a high, okay, and that level actually fails and rather leads to a break of structure to the downside. It tells you that the initial intent of the market to push to the upside has switched. So right now the bears have more strength than the bulls, okay, and so we assume that there is more bearish power in here. And so when price comes into this level, right, we are now going to look for sales to the downside. Okay, so that's what we call the flip. So typical example right in here, okay, we can see that price had made this push to the upside, right? But within this push to the upside, we have fractal movements of price. So this was basically the last low that made the high, okay? And when price was coming back, we can see first initially gave us a reaction that it wanted to push to the upside, but it failed. Okay, so we had strength changing from a bullish one to a bearish one, telling us now that the bears are in control. Okay, so with this flip or with this change in strength, we are just going to wait for price to come back into where the bears were introduced, and then we can take ourselves to the downside. Okay, so that is the first example of the flip. Second example, this will be on the buys, not the sells. We are focusing on the buys, not the sells. Okay, so in here we can see how price first of all took out that Asian low, right? A major liquidity pool. After that, we had price making lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, right? And we had this level which was supposed to create a low, but what did it do? It failed, right? It failed and rather led to a break of structure. And so when price comes back, all what you're going to see over here becomes liquidity. Okay, all these wicks or whatsoever becomes liquidity, and this level, which is supposed to create a push to the downside, becomes your entry. Okay, and we can see how price tapped into this nicely. This was in London, right? And then quickly moved to the upside. Okay, so that's another example. Let's see if we can get another more examples. So in here we can see what price is also doing. So price has made a push to the upside, right? And this is a counter trend trade. Okay, within the push we can see price making internal structure moves, right? Higher highs and higher lows, right? Higher highs, higher lows, higher highs, and higher lows. And this level right here was supposed to hold and push to the upside, but it actually failed to hold. And after that, what do we see? We see that same level that was supposed to make a push to the upside break structure to the downside, right? Telling us that we have more bearish power in here. Okay, so when price comes in there, we just take our sells and we target wherever we want to TP. Okay, so let's move to our last entry module, which is the Ycuff method. Okay, so with the Ycuff method, we have accumulation, distribution, reaccumulation, and redistribution entry models, right? So this is a distribution model right here. Okay, if you flip it upside down, you're gonna have an accumulation. Okay, a typical example. I don't want to go into let's say the labeling of this whole distribution. Normally people fancy the labeling than the logic behind whatever is happening, right? So when we look in here, right, on the 15-minute time frame, in here on the 15-minute time frame, we had price breaking structure to the downside. Okay, I had 2 points of interest. First one here, second one here. When price got into my first one, it didn't give me any entry confirmation, and so I let it fly. And it got into the second point of interest, and that is where I had an entry confirmation. And what kind of entry confirmation was that, right? So quickly, we're going to go into the 1-minute time frame and see. We are going to see that on the 1-minute time frame, we had this beautiful distribution schematic, right? So my entry was right there on the test, right? And then price just flew to the downside. If you missed this entry right here, you could have had another entry, and this would have been a follow-through break or structure entry model, right? So we had this push to the downside, price comes back, and you could have taken that entry, okay, to the downside. Okay, so this is a typical example of a distribution. Let's see if we can get another example. I think there is. Yeah, so in here also we have another distribution example, right? So price had made a break of structure to the downside on the 5-minute. I missed an entry right here, but that is not a problem. Once I had another follow through break of structure and my supply zones marked, I can start looking for another entry opportunity, right? And so we can see the price reacted off the first supply zone of the 5-minute leg, right? So let us go into the 1 minute and see what price did within that supply zone. So on the 1 minute, you're going to see this beautiful distribution schematic. Okay, so we had our bias climax, our automatic rally, our selling test, our sign of weakness, our uptrust, right? And then our UTAD, right? And after that, I enter on my on my test. Okay, so this is a distribution. If you flip it upside down, it's going to be an accumulation. Okay, I'm not touching on the accumulation model because I mean it's just the flip side of whatever is happening here. Okay, so in here we can also have another entry, and this is based off reaccumulation and redistribution. Okay, so this is how it looks like. Okay, so this is a typical reaccumulation, right? So a typical example is right here on the live chat where we had price putting some highs, almost trying to distribute, right? So price was trying to form a distribution. After this whole thing gave you a sign of bearishness that it wanted to sell, right? So you could have made your entries right in here. Okay, with your stop loss above this high. Okay, and we can see the price taps in, and instead of it moving to the downside, it failed and rather came to what break structure to the upside, telling you that it has changed. That is the whole logic behind this Ycuff schematics moves, right? So after this change, what do we know, right? We have changed from distributing to accumulating, right? To accumulation, right? So price comes down. If you don't trust this first entry, you could have waited for price to take out this high again, and we can see that price comes back to tap into this level of demand in here and short to the upside. Okay, and both were good entries, and this is just a typical example of a reaccumulation based entry. Okay, let's see if we can get another example. Yeah, this is also another example, but this was this had something to do with the Asian session liquidity and the mid-Asian ranges. Okay, I'm not going to go in depth, but this was a recent trade. Okay, so the 15 minutes had initially made a low, and personally I was looking forward for price to come into this and I can sell. Okay, so earlier in the morning when I woke up, I realized that price was ranging within these levels, right? And so what does this mean? Okay, if you look in here, we can see that price was making higher highs and higher lows, and so we had that break of structure, okay, giving you that kind of fake confirmation to sell, sorry. And so you could have entered your sales in here, right in here, and we can see that price just shot to the downside, right, came back, let's call it a mitigation, came to mitigate this other block and shot to the downside. But instead of it continuing to the downside, it failed. Okay, it didn't do that. Why? It was because this whole swing leg here was the 5-minute bullish leg. Okay, and so it intentionally gave you a false distribution, and after everything, look at what happened here. Liquidity was built up, price took out that liquidity, broke structure to the upside, and there was a POI in here which was in confluence with my mid-Asian ranges, and right above the POI we have liquidity built in here. Price came back to tap into that point of interest on the 1 minute, which was also in confluence with the mid-Asian ranges, and the target was to take out the Asian high, which is a major liquidity pool, into what the supply zone, where we can look for sales if any confirmation presented itself, right? And we can see that this was, if you can see clearly, this was the last low that created a high, and after that we didn't have any confirmation and price just moved to the upside. Okay, so this is it with a reaccumulation entry. Okay, so let's talk about this entry. So this entry is an entry, I think I posted this trade on my Instagram, and I was making fun that I had no idea how I entered this trade. This is basically it, right? So price was bullish, right? And 15 minutes was bullish, let me put it that way, and 5 minutes made a break of structure right here. Okay, 5 minutes made a break of structure. There was Asian lows from the previous day, somewhere here to be taken, right? And you know, like I said, 5 minutes had already broken structure, right? And so we can look for what counter trend trades to the upside. Okay, then we can sell back when we get into supply zones above of the 5 minutes. Okay, but let's see what happened. So in here we can see that the 1 minute made a low, right? A lower high that made a lower low, and we had that break of structure telling us that, or giving us the confirmation that we can take what the counter trend trades, okay, right after the 5 minute break of structure. So yeah, you might have had your entries right in here. Okay, price pushes to the upside, and probably let's say your stop loss was in here, and so when this retracement came, let's say you were not touched, no problem. There are other smart money traders who would have also seen this as a change of intent of price, like introducing bears into the market, and so they would have decided to also enter sales in here. Okay, and their primary goal was to continue, you know, impulse, right? Correction, right? And impulse. That would have been their primary goal. But what do you see? Immediately you have made an entry right here. Price pulled to the downside, came back, took you out on a stop loss, because most smart money traders will have their stop losses above just the structure right after entering here. Okay, so price comes back, it takes you out, and then gives you the real confirmation to sell. Okay, and that is where I had my personal entry. Okay, so this whole trade that you're looking at is an advanced inducement. Okay, I'll call it a redistribution, because it first accumulated right here, giving you the intention to buy, and then after that it gave you those fake outs, right, before giving you, or before distributing properly to sell to the downside. Okay, and believe me, I'm still in this trade. Okay, it's running around 1:20 something. Okay, so this is it. These are the entry models that I use, right? And yeah, you can go and backtest these entries, right? Whatsoever that I have thought, if I thought it's from the buy side, you can flip it and it will be for the sell side. If I thought it on the sell side, you flip it and you're gonna get the buy side of this whole thing. Okay, so this is where I'm going to end today's video. And if you found value in this video, give this video a thumbs up. And if you're not subscribed to the channel, make sure you hit that subscribe button, you turn on post notifications, and you leave a comment in the comments section. Okay, so see you this Saturday with our forecast.